Industry and Innovation team at ANZ Bank. So Industry and Innovation sits within the Transaction Banking division in institutional ANZ. So we deal with customers that are usually operate at a global scale with an annual revenue of 500 million or above. And we're also looking into the emerging technologies that are helping our customers achieve better payments and cash management globally and trade and supply chain management. That is our remit in transaction banking at ANZ. As part of our team, we research and identify the global trends and technologies that are disrupting or will disrupt transaction banking. And currently we focus on 3 areas: the payments and platform ecosystems, banking as a service or the other way around, distributed ledger technologies, digital currencies and assets, blockchain, which is where I've currently specialized. I'm not from a tech background, by the way. I qualified as a lawyer and hated it and then came to banking. And the third one is big data analytics, and that can be the use of multiple technologies, including AI, ML, OCR, optical character recognition, computer vision, to help with some of the use cases in trade and supply chain management. So after doing all that research and identifying the trends that will disrupt our sector or maybe even kill banks, we shape our strategic response. How are we going to react? Are we going to build, buy, or partner? And how do we do that quickly so we can gain the capabilities needed to stay competitive? And the last part also is part of our team's responsibilities to help embed an innovative mindset and culture at ANZ, which at a bank can be quite hard, and also making our innovative capabilities and our initiatives more visible to the market. So thank you, Professor Yang, for inviting me here today so I can talk a bit about ANZ's work in the digital asset space. So I was just going to add a personal touch to my presentation. In my team, we're not even just looking at some of the near-term issues that banks face, we're looking a bit longer term. And so I am a huge sci-fi nerd. I'm obsessed with sci-fi. And I think I draw a lot of my inspiration from Isaac Asimov, grandfather of science fiction, and Sid Mead, who was an industrial designer and a visual futurist who designed a lot of the sets for Tron, Blade Runner, some of my favorite movies. And I'll just quickly, I'm conscious of time, so I'll quickly skip over some of the quotes, but the last one at the bottom from Sid Mead. The single biggest problem in design is finding out from the client what it is that they really want. And I think some of the previous speakers have talked about, okay, blockchain is a tool, it's a technology. That's absolutely correct. It is not a solution for everything, it's not a panacea, and we must keep that in mind. There's been a lot of hype in the past about blockchain and digital assets. And I wonder how many people have heard of the Long Island iced tea scandal. So back in 2011, the Long Island Iced Tea Company was a non-alcoholic tea company. And they eventually listed on NASDAQ in one of the tiers for small cap organizations. They planned to collect $10 million from the stock offering and only received $6.9 million. Their shares then fell 13% on the first trading day. They were then told by the NASDAQ they had to basically make sure if they wanted to stay on the NASDAQ, they had to get their shit together, basically. And so they came up with, the tea company came up with an ingenious idea. And so they one day came out with a press release changing their name to Long Island Blockchain, something like that. And immediately their share prices skyrocketed more than 200%. And it wasn't, and the funny thing is that wasn't even the only soft drink company that did that. There were many companies in various industries who basically just incorporated the word blockchain or fintech into their name and rode the share price increase. One other example at the time, Sky People Fruit Juice jumped by more than 200% after changing its name to Future of Fintech and making pro-Bitcoin statements. Another company, a British investment firm, Online PLC, I think, added the word blockchain to its name and saw a 394% increase of its shares. So that was a few years ago, right? And in the financial sector, people still remember this. And so I think it's a funny story because my team, my boss, he often talks about this one, this Long Island Tea Company situation. because we need to keep remembering. We can get very excited about the technology, but we need to make sure we're solving real problems, real customer problems. And that's where you actually get traction. You're not, there's so much bad press recently about blockchain, about digital assets. And as other people have said, being able to demonstrate the real tangible benefits is so important, and we need to keep engaging industry on that. So, I won't go too deep into the technology. I'm assuming that most people here, if you're here, you kind of already know really kind of the basics. But just to recap, a blockchain is an immutable timestamp chain of data that is linked and recorded in blocks. It's tamper-proof, it's a shared ledger, and because of that, there are a lot of benefits to the traditional banking system and the way that it impacts that. Because of its shared ledger, everyone sharing the same ledger, you can start to reduce the number of silos, or at least attempt to, and use the same ledger so you eliminate the need for reconciliations at the end of the day, reconciling your ledger across different companies. Obviously the most, I guess for our team, the most obvious use case for using blockchain networks is to achieve 24/7 real-time payments and settlements. And this is the number one, I guess, idea that comes to mind when people say, why do we need banks? If we can just use crypto and then we can actually even transact wallet to wallet in Ethereum or whatever it is, anytime at very low cost, because it's peer-to-peer. I can join up in 2 minutes, whereas with a bank account it might take me a lot longer to sign up, and especially in developing countries, there are lots of people who don't have access to the banking system or don't even have the identity documents necessary to open a bank account. And so, of course, yes, we've all heard, blockchain networks and transacting with digital currencies, it can make the economy much more financially inclusive, more efficient, and that is absolutely, that real-time cross-border payments is absolutely something that banks are investing in and trying to do right now. The other two characteristics of digital assets, fractionalization and programmability, I will get into that and what ANZ is doing in that space. But these are some of the real benefits when it comes to blockchain and tokenization, as opposed to some of the hype. So as I said, 24/7 real-time cross-border settlements is something that major banks around the world are trying to achieve right now to improve their internal efficiencies. In fact, I was going to touch on this later, but ANZ is actually, along with a few other major banks like Wells Fargo, developing their internal blockchain or DLT-based platform so that we can manage our own liquidity between our global ANZ branches intraday in real time and just way more efficiently. And I'm not sure how many people know how money is basically moved around the world right now, but the reason why when you send money to a relative overseas, maybe you have a friend based in Southeast Asia and you want to send some money to them, it can take days, it can take a week, because how money is moved right now is through correspondent banking, a network of bank partnerships. The money doesn't just go to the other bank at the end of the chain. It might be my friend might use a smaller, obscure bank in Thailand. But to get the money or to get the value over to that bank, maybe ANZ doesn't have a direct relationship with that bank. So we have to first go through perhaps JP Morgan, and then JP Morgan has a partnership with another bank. That bank has a partnership with the end bank, and that's how money gets moved across today. And all those banks in the chain take a clip, take a beat, which is why we're very unpopular. And people complain, when I make international payments through banks, it's so expensive, it takes so long. This is something that needs to be solved. I can't even see, why are there so many fees? Where are they coming from? And we recognize that, right? We are trying to shift away from the traditional systems that we use, the legacy systems, and see how we can utilize blockchain internally, incorporating the benefits of that for the bank. Perhaps the customers don't even see it at the end of the day, they don't even realize it, but we're starting to shift towards blockchain infrastructure. So that internally, we're moving things much, much more efficiently. So micropayments and streaming payments is another use case that my team likes to talk about a lot. This is kind of considered a technical holy grail of crypto and digital currencies. So basically, with current money and digital money, perhaps today with Australian dollars, the smallest denomination you can get is 5 cents. And when you transact money digitally, you can only get to 2 decimal points. But with the token technology that underlies digital currencies, you can fractionalize a token into very, very small pieces. I've forgotten how many decimal places, but it could be like 8 decimal places, even more for certain crypto coins or tokens. And because it's a peer-to-peer network, because it runs on a decentralized network, and you're cutting out all those intermediaries, you can then enable small, very, very small value payments at a very low cost, or pretty much low enough that you don't have to really worry about the fee. All right, why do merchants charge a $10 minimum, require a $10 minimum spend these days? Because card companies charge like a 2%, 3% cut of the value that's exchanged. Moving to crypto, or whatever type of crypto you use, we reduce that fee significantly. And this is something that we recognize. And just an example here, in 2019 at a conference in Denver, an Ethereum conference, they trialed using stablecoin, which is a digital currency pegged to and backed by usually a US dollar or a fiat currency, can be backed by other assets. But they used a stablecoin within the conference to purchase food and beverages at the event. So everyone had their digital wallet, they had their stablecoin, and there were food truck vendors who sold more than 4,400 meals for a total value of more than $38,000. If the transactions were made with credit cards, the food truck vendors or the merchants would have had to fork out $2,400 to support those transactions. That would have been the fee, card fees. Using stablecoins, can you guess how much it cost to process those payments? Anyone want to take a guess? So for that amount of money, and compared to a cost of $2,400, the cost to process all of these payments of stablecoins was 20 cents. So obviously, as a bank, we recognize that this is a game changer. So we're keeping an eye out on this, right? The other use case of streaming payments is basically with the technology that blockchain enables, we could perhaps move to a business model, where instead of signing up to a monthly subscription for something, every time you log onto the platform, or you're viewing a movie, or you're listening to something, that company is charging you for the duration that you're spending on that platform, like opening a tap, right, and using water. They're only charging you for the amount of water that you use. And when you're not using the platform, they're not charging you. I know this sounds, I think for me, it would be awesome, because for developing economies and for certain communities, this would make things a lot more affordable, access to services a lot more affordable. And technologically speaking, tokens, blockchain, it can enable streaming payments. But we're still right at the very, very start. And there's very little, I think there's actually very little companies that are actually developing streaming payment solutions out there. And again, to even do so successfully as well, and get customers on board, get users on board. This entire space is still quite new to most people, right? Because I live in a bubble. I work with this stuff all the time. But most people, if you talk to them, they probably don't really know how blockchain networks work, right? A lot of people still think that Bitcoin is blockchain. So we're at this gap right now, big, big gap. And sometimes we see use cases like micropayments and streaming payments, and it sounds awesome, and maybe we can do it. And the problem is, a lot of users just don't get it, right? We've still got a long way to go in terms of educating people and getting them to understand the benefits of this technology and why they should move to this instead of using what we have today. And so in terms of, is it just hype? There were actually a couple of fintechs who tried to do micropayments for content. There's been Lendl and Satoshi Pay, who partnered with some big like magazine companies in Europe. And so they would have a little widget at the side of the website, and if you click on it, you can top up your digital wallet with crypto, different types of crypto, and then you can make very, very small value payments that the content creator would then accept. But is it just hype? Well, right now, we're pretty unsure. It seems like users don't really want to use this. And so even though we think it's pretty amazing, again, a lot of when these content companies were interviewed, they said, well, a lot of our users just don't understand it. Not enough people hold crypto or stable coins on the network that supports these micropayments yet. If they don't understand it, then you lose people very quickly. And so I think that was a very interesting quote that was from one of the magazine companies that actually trialed Satoshi Pay as a micropayment for their magazine articles. So it would be great if you could just pay like 30 cents to view an article instead of having to sign up to the Herald Sun or whichever publication that you want to read. But again, we're not there yet. I think people are still, at least in my space, we're underestimating how many people still understand crypto. Back to institutional banking and institutional players, however, tokenization of data and real-world assets is where it's at. This is where we're seeing real value.